Are you curious what the rising interest rates mean to your exact mortgage payment? We're going to show you some examples on this week's Tuesday's Tips.
Looking conventional, right? This was February, and I took from what I've sent you and other agents that are on that blast of saying like, well, let's say you were looking last spring and you put it on hold. Well, your rate was 2.99 and instead of 4.1. Now, if we still had houses that went for $100,000 or $200,000, not that big of a deal because it's not that big of an issue. But I've got first-time home buyers that are looking at houses that are 600,000 or 700,000, which I sometimes have a tough time to put my head around. That's what they're looking at as their first home, but yay for them. But what I'm going to do, Jeremy, is give you, say, a $500,000 loan example and a $400,000 loan example.
Okay.
So I think for you and where this could benefit you in your business, as well as your clients that follow you, is that if there's been anyone who's told you I'm waiting to put my house on the market, don't wait. Your pool of buyers is getting smaller. Even though open houses still have a ton of people, there's still a ton of people that have decided, okay, we're going to take a step back because it's gotten a little too expensive. Does that make sense?
Yeah.
Say, I'm going to reverse into a $500,000 loan.
Okay.
Where, let's say the person had 5% down, 500,000 divided by 95. So we'll do, say, a $526,000 price. We'll do a 5% down payment, and we'll do where last week was.
Okay.
We'll do some advanced, we'll do some advanced options. For whatever reason, it wants to do 4.13.
Okay.
It doesn't believe that my rate of 4.1 was legit over the I'll do taxes at $4,800 a year. Those can be all over the place. I know that you're in a few different states as well where you are. Let's say it's a perfect score. So just to give you an idea, that would be a $3,146 monthly payment.
Okay.
So now let's take what it was last summer. So say someone that was looking last summer and it was at $299. Same assumptions, using the same amount for homeowners insurance, using the same amount for whatever reason it wants to keep tweaking certain things. Okay, we'll play this way. So it was a $2,830 payment. So you got a difference of 30. So it's a difference of $316 a month. And for some people that can really affect them to affect what they're gonna look at for a home. I know I said I'd do a $400,000 one for you, but I think in the interest of time, the example kind of makes sense that if there's anyone that's kind of in your web or any of your followers that are thinking, hey, now's the time to sell. I know you like to analyze data. I don't know what these higher rates are going to mean. If it's going to mean that we're going to see prices start to level off, or maybe not see as many over asking offers, or what. Time will tell, because it's only been a matter of a few weeks that we've started to see like these really big jumps.
That's right. And it's traditionally a non-peak season for us up here in New England, right? Like I'm looking out at my office at the lake right now and it's frozen solid. So, once, we get to end of March, into April, May, June, into the peak season there, that will be the true tale to see what happens if the rates stay at, 4%-ish, and the market inventory stays the way it's been. I'm curious to see our price is going to level off this year. Are they going to just continue to creep up a little more slowly? Will they start to come down? Who knows? And you know what? Nobody knows. You can have every analyst in the world look at it, and like you said, I like to analyze data. You like to analyze data, but we just don't know. We just don't know. All right. I hope you enjoyed this episode of Tuesday's Tips. I'm Jeremy Bailey, your Flying Realtor. Until next time, remember to keep your wings level and I get a fly.